Hello traders, my name is Horvat and welcome to a new video analysis in which we will take a look on US dollar index, euro dollar, dollar yen and gold. Now on dollar index, as you know, we are tracking this very complex wave structure from this 2008 lows. We are observing a free wave rally here. This was wave A. Now we are tracking the second wave called the wave B, which I think it's a triangle, and then we will be looking higher for a wave C. But for now this triangle still appears incomplete. Triangle is a 5-wave pattern, so we need A, B, C, D and waves E before we may look for immediate impulsive reaction to the upside. For now this is wave A, wave B, and it looks like wave C has ended in recent weeks here, and that we will see now push higher up in wave D. Now the reason why I think that wave C has bottomed is here on a daily chart, where we can clearly see that decline from the highs was very complex, very hard to count this as an impulse simply because of this recent overlap. Okay, so I think this was just a complex decline, a double zigzag. This was a first zigzag, wave X, and a second zigzag, which has been confirmed and completed after a sharp reversal to the upside, and more importantly out of this downward channel. Okay, so I think this was a corrective channel. Okay, and because of the breakout, of course I will be looking to the upside. Now from a minimum perspective, I expect to see a free wave rise in wave D, because as we know, each leg in a triangle should have a corrective look, so it should be minimum structured by 3 legs. So I suspect this was wave A, or maybe still underway. Then we will see a wave B pullback, and then we will be again looking higher for a push wave C, most likely above this wave X swing zone. Okay, now on the 4-hour chart, I can see a very nice impulsive price action. Now this was wave 1, wave 2, an extended wave 3, which is typically the case. As you know, wave 4 pullback. Notice that this wave 4 pullback found a support very nicely at this broken trend line. Okay, so this is a nice continuation mode for the US dollar. So this was probably a 5th wave of this rally, and we know that after every 5 waves correction will follow. So for now we have seen move to the upside, now up, and it looks like we will stay sideways here, but more importantly, I doubt that this wave B or wave 2 has already finished its correction. Okay, as we know, we need 3 legs, and these second waves, B waves, corrective legs are usually more complex. They take a long time to unfold, typically longer than impulsive waves. Okay, so I really doubt that this wave B or wave 2 has already finished. I suspect that we will see more sideways. Okay, and ideally more weakness here, because as you know, when 5-wave move is finished and when correction occurs, you will typically see a retracement back to the region of a previous 4th wave, which in our case comes here. Okay, so ideally we will see this level tested, and then we will be looking for a push higher. And now let's take a look also, of course, on the euro dollar. On the euro dollar, as you know, we were tracking this wave B running triangle for a while. Okay, and it seems that this is the final leg of this wave B triangle. This was wave A, B, C, D and E. In our recent video updates, we were looking and noted that we expect a little bit higher levels for wave E, maybe even test of this trend line. Okay, but as always, we need to keep in mind our primary focus, which of course is will be wave C to the downside. Okay, so if reversal like this will occur, then of course we need to respect the price action and consider a possibility of a completed rally. Okay, so on a daily chart, we came out with this wave count, and can be counted in 3 waves: A, B, and wave C up. This wave C was also an ending diagonal with a throw over in wave 5. Throw over means that you will see a sharp move above the trend line connected from waves 1 and 3, but then you will see even stronger reversal. More importantly, this reversal took out the wave 4 support and also this rising trend line connected from these lows. Okay, so this is very important sign for a trending change, and even if just temporary. Okay, ideally we will see an impulsive weakness here, but as traders we always focus on minimum expectations and on probability, not only on possibility. So here is also the second wave count, which suggests that actually wave E rally is still incomplete. It's labeled as a double zigzag, first zigzag, wave X, and second zigzag underway. And the main difference between wave count 1 and wave count 2 is that in the wave count 1 I labeled this as ending diagonal in wave C, while here is labeled as leading diagonal in wave A. Okay, but even if this wave count would prove correct, okay, we are now in corrective phase down in wave B of an incomplete recovery. Okay, but wave B is a corrective leg, so we need 3 legs to the downside as minimum. So from this perspective, even this wave count suggests that euro dollar is in bearish mode, even if it's just temporary. So this coming pullback, which I think is already unfolding, will be only temporary and part of this incomplete weakness. Okay, so we expect lower levels on euro dollar as long the market is trading beneath these yearly highs. Now here on the 4-hour chart, we can count nicely 5 waves to the downside. This was wave 1, wave 2, typical extended wave 3, wave 4, very nice wave 4. Unfortunately, we missed our limits for, I don't know, 10 pips or less last week. But then this was a very strong move to the downside, and then sharp reversal. This usually occurs in 5th wave position when all traders will want to get on board, but as Elliott wave traders we know that this is a 5th wave, and usually you see the opposite direction to the crowd. Okay, so I think that market is now in a corrective phase. It's here on the 4-hour chart, it's probably in wave 2 or wave B. That's not important. Okay, important is that in either case this is corrective recovery, which I suspect it will stop at this region. Okay, maybe at this swing zone where broken support will react as a resistance, or maybe this wave 4 swing zone of one larger degree. Okay, so that's the region from where I expect to see weaker euro dollar again. Okay, and now also let's take a look on, we said, on dollar yen. On dollar yen daily chart, we are tracking this wave 4 consolidation now for a while. Okay, the market still didn't break out, so we need to keep an eye on 2 wave counts. The first wave count and the primary wave count suggest that we will see a break higher through this wave, this swing high, that will cause an acceleration in wave 3 or wave 5. So in such case we would be focused on impulsive rise to a new high. Okay, the second wave count, which is alternate count, labeled as here wave B triangle, it represents actually this wave count, which suggests that this was a first leg, wave B triangle, and then we will see a wave C down. If this wave count is correct, then of course obviously we need to stay beneath this 100.60 swing high. Okay, because that's also the level where bullish trend would be confirmed. Okay, for a wave 3 push higher. But I am focused on this wave count, and the reason are the US bonds. The US bonds 30-year US bonds broke sharply to the downside. I will show you the wave counts in few seconds. And as you know, when US bonds are trading lower, the yields obviously are rising, and dollar yen will typically follow. Okay, and this is also matching with the euro dollar, because euro dollar and dollar yen are trading inversely at the moment. So obviously, if we look for the weaker euro dollar, I expect to see higher dollar yen. Firstly, before we go to bonds, let me also check this 4-hour chart, where from this end point of wave 4, okay, this is actually here, I'm tracking possible 1-2 bullish scenario. Here is this wave count. This was probably a 5-wave movement up in wave 1. I can label this very quickly. And this was wave 1, wave 2, wave 3, wave 4 and wave 5, and then we have seen a 3-wave setback, and now again 5 waves to the upside, again 3-wave setback. Now this was a very tricky reaction. Okay, this can be labeled as a flat, expanded flat formation. We have seen 3 waves down in wave A, 3 waves up in wave B, and then spike to the downside, and now reversal to the upside. Okay, now this, of course, it's expanded flats are very tricky to find a reversal point when you're tracking the wave counts live. But now when I see an impulsive rise from this swing low, and when I can easily say that former decline was completely erased and fake, then obviously I know that bullish price action, which was on the cards previously, is now back underway. Okay, so I labeled here end of a flat correction, and I will be looking higher, ideally in wave 3 or 3, with minimum upside objective around 100.50. okay, where's also a trend line of this triangle, okay, upper trend line. So I'm focused on bullish dollar yen, and the reason is, as I said, this 5-wave rise, and some long opportunities could be very nice here on dollar yen. Okay, because of this structure, and of course I will be looking to the upside as long the market is trading above this critical invalidation level. Okay, and as I said, I will take a look now on US bonds, which is also the reason why I'm tracking this bullish wave structure on dollar yen. Here in front of me I have 30-year US bonds. You can see here I labeled on the weekly chart, this was a leading diagonal in wave 1, wave 2, extended wave 3, wave 4, probably finished, and now we are moving down in wave 5. Now here on the daily chart is the reason why I mentioned that wave 4 is probably finished. Notice that we have seen a 3-wave rally from the low. Okay, we have tested these levels around the former wave 4, which usually will turn into reversal zone. So from here we have seen a move to the downside, and as you can see, we have also seen a very decisive break of this lower trend line of this corrective channel. Okay, so this tells me that this 3-wave rally is complete, and that US bonds should be moving to the downside. If that's the case, then I want to see that prices will stay below this level. Okay, and meanwhile dollar yen, of course, should then move to the upside. Okay, because as I said, if bond prices will move lower, dollar yen will move higher because of the higher US yields. I can also put an overlay chart here. Here is overlay. We'll rename it to dollar yen, of course, and rework the time frame, and we will make it blue. Okay, we will also make this black, and as you can see, this in blue is dollar yen. These are bonds. When bonds are moving to the upside, dollar yen is moving to the downside. Okay, and you can see here that this has been the case for a while now, and obviously if dollar yen has reversed higher from here, bonds lower from here, okay, from these points, bonds are trading lower, then dollar yen should be trading higher. So if this our wave count here on US bonds is correct, okay, then as I said, dollar yen should should continue to the upside. And now let's take a look also on gold. On gold monthly chart, we identified end of a 5-wave rally here, and now we are focused on a 3-wave decline in a corrective price action. You can see here an extended 5th wave. Usually when extended 5th wave occurs, you will typically see a retracement back to the start point of wave 4 and not end point of wave 4, okay. But in either case, I think that we will see more weakness on gold, possibly test of this psychological level around $1,000 per barrel. And the reason, of course, is also this daily chart, where I can see an incomplete impulsive decline. This was wave 1, wave 2, extended wave 3, wave 4, and now we are looking down in wave 5. This was a 3-wave rise. We have seen a broken channel here, and if you recall, we were tracking this flat correction for a while now, very closely actually. Yes, we were looking for an expanded flat, which means we suspected that wave E will move above the start point of wave A. Just let me label this wave 2. This was wave A, wave B, and wave C. So we were actually looking for spike higher and then a reversal to the downside, okay. This would then be an expanded flat, but because we didn't see this spike through wave A, it doesn't mean it's not a flat, okay. It's still a flat, but it's not, it's now a running flat, okay. So I'm looking still to the downside here. We probably completed this flat correction in wave 2, and now we are trading down in wave 3. Here on the 4-hour chart is the reason why I suspect that this wave 2 has ended here, because I can count 5 waves of decline from this swing high. So we know that 5-wave moves show direction of a trend, which in our case it means it's bearish, okay. However, after every 5 waves, correction will follow, so I do not expect any immediate weakness here, especially not as long we are above this 1250 support. So I would love to see a 3-wave bounce and the reversal back into the former wave 4, and then a move to the downside. But in either case, of course, invalidation level is here. So as long as this critical level is in place, I will be looking to the downside. And also let me bring on this chart, which is actually head and shoulders pattern presented on gold daily line chart, okay. This was left shoulder, as you can see, head moved to the downside, where market reversed higher and formed this neckline. This was then a right shoulder, and now again we are approaching this neckline. So this break, a decisive break of this neckline, would be a nice indication and confirmation that this head and shoulders pattern is complete, which means that in such case we would focus on more weakness on gold, okay. So this would then be quite nice confirmation for our bearish wave count that we are tracking, okay. Okay traders, that's it for today, and I will catch you with the new updates on our intraday page. Have a good day.